Second Finance Minister, Datuk Johari has reportedly said that Malaysia has no choice but to ride out the ringgit roller coaster. According to Bernama, he says Malaysia needs to focus on enhancing its economic fundamentals at the moment. That means it won't peg the currency or impose capital controls. During former Prime Minister Tun Dr. Mahathir Mohamad's tenure, Malaysia had pegged its currency during the 1997 economic crisis. This isn't an option today, says Johari, as Malaysia would be left far behind and investors would flee. As for even touching the interest rate to attract foreign investors, that is simply out of the question. Johari says it would only raise the country's household debt. The ringgit has plunged by about 7% against the dollar over the last 2 weeks. Today, it's hovering at 4.46 to the greenback. Malaysia has fallen out of the intermediate wealth group and into the frontier wealth range as high debt, scant savings and a weak ringgit hurt mean wealth. According to Credit Suisse Research Institute's Global Wealth Report, Malaysia's wealth per adult was down 7% from last year to about $24,400 or nearly 109,000 ringgit this year. The report said Malaysia had been hovering near the $25,000 lower limit in recent years, but this year it has finally fallen below the threshold. This means, on average, the country's 19 million adults are poorer by about $1,900 or roughly 8,400 over ringgit compared with 2015. Just for comparison, adults in Singapore made, on average, almost $277,000 in wealth or 1.2 million ringgit. Meanwhile, the average debt borne by a Malaysian adult was also up, rising 5.8% from 2015 to some $7,500 or 33,000 ringgit this year. Collectively, total household wealth in Malaysia is down by 5% this year to $26 billion or 116 billion ringgit. KFit Group, owned by serial entrepreneur Joel Neo, is on an M&A sprint. Fresh from acquiring Groupon Indonesia in August this year, KFit announced that it has bought over Groupon Malaysia to expand its current lifestyle app Fave. KFit did not disclose how much it acquired it for. Unlike the Indonesian buy, however, Groupon Malaysia won't be retaining its name. Instead, it will be integrated into Fave in early 2017. This as KFit expands Fave's offering from lifestyle and beauty products to include restaurants and holidays. Neo points out that Groupon Indonesia's business has grown by nearly double since the acquisition in August, and that he is confident that the same growth principles will bring an exciting new offering to Malaysia. Fave is currently available in Kuala Lumpur, Jakarta and Singapore. Construction and property conglomerate IJM Corp Berhad and its 55% owned oil palm division, IJM Plantations Berhad, both reported their earnings today. IJM Corp saw its second quarter net profit climb 5% to 164 million ringgit, while revenue rose 11% to nearly 1.5 billion ringgit. The higher earnings were driven by strong contribution from its construction, manufacturing and quarrying, plantation and infrastructure divisions. It declared a 3-cent dividend and says it expects a satisfactory performance in FY 2017. Meanwhile, IJM Plantations returned to the black in the second quarter after reporting a net profit of 44 million ringgit from a net loss of 5 million ringgit previously. This is thanks to improved commodity prices. Revenue rose 39% to slightly over 200 million ringgit. IJM Plantations did not declare any dividend for the second quarter. Looking ahead, it expects a favourable financial performance in FY 2017 if the commodity prices remain at current levels and the crop production is not affected by adverse weather. It's a good quarter for TH Plantations Berhad, the oil palm plantation arm of Pilgrim Fund Lembaga Tabung Haji. Net profit tripled to nearly 20 million ringgit thanks to higher average prices for fresh fruit bunch, palm kernel and crude palm oil. Revenue grew by 28% to 170 million ringgit on the back of improved production. TH Plantation CEO Datuk Seri Zainal Azwa Zainal Amiruddin says this improvement could indicate stronger recovery in production, which he hopes will continue in the coming quarters. On prospects, TH Plantation is cautiously optimistic for earnings in the next quarter. It is also mindful of factors such as weaker demand from importers like China, India and the EU, and also competition from other vegetable oils which could affect its financials.